Okay, so cool. So let's kind of switch gears and let's kind of dig deep into, the real estate investing journey that you now embark on. And then also, I want to dive into the multifamily space because I think that's where you really are excelling at right now.
Yeah, absolutely. Okay. So I mean, just kind of right after that, the coaching with Irfan, it led me to our first year we did about 35 wholesale deals our first year with myself and my brother and business partner.
Right. And what was it like though, giving over that check? I'm sure it was a big check in the beginning.
Oh, it was scary. It was scary. I drove over and it's funny, like I guess I didn't tell this part of the story, but during that time I didn't have the money in my bank account, but I used my wife's line of credit. She let me use the line of credit because I'm like, hey, I really want to join this. I don't know how to do it. I don't have the money. She said, use my line of credit. I used her line of credit and it was scary, right? It was like do or die kind of thing, right? Like if I don't make it with this, then I'm going to lose the money I have to work to get it. But if it works, what could it be? What will life be, right?
Yeah, you're gambling on yourself.
Yeah.
Or gambling or investing in yourself.
Right.
Right.
So yeah, it was scary. It was scary. I remember I even have a picture of the check because I just remember wanting to see it every day when I woke up, what I had just got myself into. But no, it was honestly the best decision I could have made. Right. That's what led to all the success and everything. And, until today, I still get mentors and coaches because I so highly believe in them. Like I see what they're able to help you accomplish. But yeah, so that led us to start picking up some properties, right? Our first year, then wholesale, we picked up some duplexes, right? Start off with the duplex. Did that for until we scaled up to 10 units. And then I realized this is a lot of, every time I close on this deal, it takes me so long, all these fees, So I didn't really like that side of things. And then at the same time, during that time, I met a buddy of mine named Frank, and he introduced me to Alfonso, the Godfather.
Yeah,
right?
Yeah. I actually just sat down with him not too long ago to do a little podcast. He's a great guy.
Yeah.
Full of energy.
Phenomenal, honestly.
Yeah.
And so he introduced me to Alfonso and his whole, Wealth Genius mastermind. And that just opened up my mind to what's really possible, right? Raising capital, building a brand, underwriting.
So up until then, were you raising any capital to acquire those? Was it 10 units altogether or 10 buildings?
Yeah, so it was mainly,
smaller, single family homes?
Yeah, mainly duplexes. And at the time, I had done one JV, right, where we brought a JV, he brought the capital. But other than that, we were just using our own money to buy these properties, right? Because wholesaling kind of, give us quite a bit of capital to play with. We would buy it, do the whole burst strategy, right? Buy it. Yeah. Renovate it, rent it, refinance it, pull it out.
So you're recycling your money.
Yeah.
Okay.
Until we got to a point where, the banks were like, yeah, we're not lending it to you guys any more money, right? And then so we started bringing some JV partners to acquire. Some of them did well with those projects, right? We bought it at the right price, had a good team. And I think that's really important when you get into real estate, having a good team, good contractors, people you believe in and people who believe in you. So that's what led us. So multifamily, learned everything I could about multifamily with Alfonso and the whole Wealth Genius community. And honestly, just being part of that community, being part of a community that supports you, that are doing big things, right? That are doing 30 units, 40 units, 100 units. I was like, it's possible.
Yeah. So let's break that down. For somebody who's listening to this, maybe they're at that point where you were before you got into the multifamily space. Walk us through that multifamily purchase. How do you get started setting up the GP and the LP? You obviously decided to go into the US. Walk us through that process. We'll talk about this for the next 10 minutes or so.
Yeah, absolutely. So I guess I'll dissect the states a little bit more because and here we haven't really done GPs, LPs, more being like JVs, even with the with buildings that we've bought here. So a bit more JV. They bring some capital. The whole structure. I mean, it all goes down to there's different roles, right? There's the capital raiser, somebody who can raise capital. Keep in mind, you can't just raise capital. You have to also do asset management or some sort of other task in the group. But what I really like about multifamily is that it's a team sport, right? You find out what you're good at, right? Me, I love talking. I love communicating. I love creating relationships. I love talking about what I do. So in that case, broker relations, creating relations with brokers is a good thing to do, as well as raise equity, right? Because you're talking to people. But if you're analytical, right? If you love numbers, you love spreadsheets, then the underwriting is going to be something that you're going to want to focus and put your time in. And usually engineers, people that are doing, consistently working with numbers are good for that. And then you have your asset management, right? So they're usually boots on the ground in the market that you're investing in. And then you have the person that found the deal / they also, you might need somebody to qualify for the loan if the loan is like $20, $30 million. So that's kind of the team behind it.
So you're saying 3, preferably 4?
I'd say even five, okay. 5 people, because even raising capital is not easy. So sometimes you have multiple people raising the equity and asset management.
Okay, got it. So you get that set up. Now, GP LP, what's the difference?
Yeah. No. So what we use with the multifamily in the States is we use the syndication model, right? With the syndication model, it allows you to pool money together from limited partners, right? And then you're able to, the GP team there's able to, execute on the business plan.
Okay.
Right. And the great thing with the GPLP model is that the LP partners are really passive investors, like true passive investors.
And those are the people that you generally would be raising the funds from.
That's exactly.
Got it. And then now the GP, which would be you and the 3 or 4 other individuals, are going to be the ones that's now going to go into the US and purchase these buildings.
Correct. And for the most part, a lot of our partners, at least in the States, have been American, right? Just because they're boots on the ground, they have, relationship with brokers already. And usually we have already in-house property management, because that's a huge thing in the States as well. And especially on the larger assets.
Okay.
So, working with, and that's something I want to talk about, is working with good operators, working with people that have a track record, working with people that have done this. It's not their first rodeo.
Right.
So that's kind of the structure for that.
Yep. So you find a building.
Yep.
Okay, what building and where and why?
Yeah, great question. So we typically really like South Carolina, Charleston specifically, and then Savannah, Georgia. But we also like, Charlotte, North Carolina, Raleigh, Winston-Salem. Like that North Carolina, we really like it. A couple of reasons for that, right? Landlord friendly, which is huge. We also really study the market before we get into it. So we typically won't do anything that doesn't have over 100,000 people in a population growth, right? So we typically like to see at least 1% growth year over year. If the population is declining, we typically stay away from the market. But the main thing is jobs, right? We want to make sure that is a place that has jobs, because, this is our tenants that are going to be employed, and we want to make sure that it has a lot of jobs, low crime, low vacancy rate.
So fundamentals, yeah. So going through the fundamentals,
Yes.
what are you kind of getting price per door in those markets? They probably obviously differ.
Yeah.
But
Yeah. So it depends on the asset class, but we're typically like 140, 150 a unit, give or take, right? So it just really depends on the market, the class, the type of property that you're going after. If you're going B class, C class, D class, A class.
And that just really means the type of tenant profile. Were you talking about the class?
Yeah, tenant profile and the asset class, right? What year was it built, right? And then the location, right? The location, the amenities. So, A class would be like something brand new, all the amenities, all the bells and whistles, right? B class, you're talking about 80, sometimes 1990s to 2000s, and then C class is typically, 1970, 1980s kind of built.
Yeah.
Right?
So, and what class are you typically in?
So we are typically in C and B class. So what we really like to find is a B class. A C class asset in a B class location, right? Because that means that we can take it to a B class if we do the proper business plan.
Right.
B class as well, B minus, take it to a B plus, right? We tend to stay away right now from A class, just because it's tough to add value to something that is brand new, right?
Right. So that's also really what you're looking for, is value add.
Yes.
Okay. So value add, looking to turn over some of these units. I assume it's probably a little bit easier in the US to turn these units over than as it is in Ontario. All right.
That is a big thing. And keep in mind, we do have, what we do is we build strategic partnerships, right? So we have a strategic partnership in the States with our GP operators and our team. And then we also, although we're not overly buying here, we do have a strategic partnership with Adrian Pinoso. I think you've had him on the podcast as well, where we essentially just partner up. We said, okay, we don't want to recreate the wheel in Ontario. We just don't, right? To be completely honest, I just don't want to recreate the wheel. Let me align myself with somebody who has the infrastructure to be able to take on a property in Ontario, a building in Ontario. So we do buy in Ontario as well, specifically Hamilton and the Niagara region, but we work with Adrian on that side of things because we don't want to recreate that. We rather just kind of bring the deal, put some things together, and then have our focus in the States.
Got it. Okay. Now, with everything that's kind of happening in the economy, and prior to interest rates rising as fast as they did, what type of an LTV were you in before? And are you changing that moving into the future to make sure that you got like a buffer, you're not, you've got enough funds?
Yeah, no, that's a great question. I mean, and loan to values back then were like about 80% loan to value, right? A lot of people were doing bridge financing, right? but what we're seeing now, it's anywhere from 65 to 70% loan to value, even at sometimes 50% loan to value.
That's what you're doing because you more comfort level, or that's what you're only being able to get approved for because of the situation that we're in right now in the economy?
Yeah. Great question. So that's what we're seeing in terms of lenders. That's what they'll go up to. Now, our most recent deal that we did, it was a 70% loan to value, but it was an assumable loan. Mm-hmm. So that's what we're seeing that's working really well right now, is buying assets that have an assumable loan. And like this one specifically had like 4% interest fixed for the next 10 years. Okay. Right. So right away you mitigate the risk of interest rates, right? So that's what we're seeing. Those are the deals that are penciling out. Other than that, it's very hard to make a deal work right now with the interest.
And break down an assumable loan just in case somebody's listening. They don't.
Yeah. So basically what happened is that the previous owner of this building had just refinanced a year before. So 2023, he had just refinanced. So he pulled out as much equity as he could, and then he put a fixed rate mortgage on that asset. In the States, I don't know if you know, but the mortgage amortization is a much more extended. They extended to like 50 years in some cases, right? So in this case, this mortgage was fixed 4% for the next 10 years. So we don't have to worry about interest rates.
That's good.
So that's kind of how our underwriting went based on that, right? And so that's what we're seeing that's working well right now. Anything that has assumable debt, a low interest, fixed.
Right. Yeah, there's so much more opportunities in the U.S. I guess this is like a larger country. It's just got different rules, regulations in each of these different states, and it seems more fair, more balanced. The more I look at it.
No, you nailed it right on. Like like I said, our business model is value add, right? If you're a value add investor in trying to implement that business plan in Ontario, it's very difficult, right? Especially as with some of the news that's been coming out, right? You see, I see it in the news, the landlord from Toronto, where she was trying to kick out a tenant, or she sold her house. The buyer that was buying it wanted vacancy on the unit.
Yeah, such a mess.
And so I think they offer $75K. But when I look at that, and I'm like, every tenant is watching this, right? Like all these tenants in Hamilton, I agree, they're watching. They're saying, okay,
so it's 75. Okay, 100 now. 100. Let's do 125.
Exactly. So I don't think that benefits anybody, and I don't see what the rent control benefits. Again, I don't see what they benefit, right? Because if you think about it as a landlord, you're coming in, you're trying to make this place so much better. You're pumping money for the down payment, closing costs, renovating it. But then if you're not able to turn over units, then you can't execute on that business plan. So that's the big thing with the States. In my eyes, the States is scale. That's why I look at scale, right? Like you want to scale, you want to build a huge business with thousands and thousands of units. That's kind of where you want to go. And here is just slower.
Right. Okay. What else are you looking at when you're looking at a building? And also, what's your exit strategy? Are you looking to hold these things forever, or do you exit in a few years?
Yeah. So typically we're usually selling at the 3 to 5 year mark. Usually we sell it. But I mean, if we're able to refinance, me and my partners, we are like whole, long-term investors in the States. So we typically want to see if we can refinance. If there's an opportunity to refinance, the market is good, interest rates are low, it allows us to pull. What we typically want to do is we want to return 80% of investors' capital. If we can return 80%, we'll refinance it. If not, then we typically will sell it. It just depends on the specific property. But yeah, what are we looking for? We're looking for low vacancy. Sometimes we'll buy something at a 90% occupancy, but we're looking for good marketplace, good jobs, low crime, good unit mix, right? So we want to have a lot of 2-bedroom, 3 bedrooms. We don't want to buy something with just bachelor or 1-bedroom units, because those are the ones that turn over the most. And we're just looking for strong marketplaces, right? Like we want to see Starbucks nearby. We want to see, we want to see Costco nearby. We want to see all these big retails around it, because that means that they study the markets really well. So when you see them or 3-4 Starbucks around your property, that's a good sign.
Right. Okay. Yeah. Listen, I think what you're doing makes a lot of sense. And where do you see it going from here? He's going to continue to grow in the U.S. And are you building additional businesses around what you're currently doing right now?
Yeah, great question. So, I mean, our business model is like in Ontario, buy as much as we can with our partnership with Adrian Generational Wealth. In the States, we got some kind of bigger goals out there. Like our personal goal, like business goal with myself and my business partner brother, is to get to $1 billion in assets under management in the next 10 years. So that's. Wow. It's a big goal, right? But I've came across, I've interviewed. We have a podcast as well. operators that have done that. They have done that in 5 years. They have done it in 4 years, right? So I'll give myself an extra 5 years of buffer.
All right. So you want to scale this. You want to
Yes.
grow this thing. You want to get to something big. My question is this. I think we've all seen and heard that obviously a lot of larger, we'll say, investment companies and investors have been hit. And a lot of people have lost money, whether it be through first mortgage, second mortgages, right, in the private space, or promissory notes. How do you ensure that you're protecting your investors or even yourself as well too moving forward?
Yeah, I mean, in my opinion, is just finding, keeping the fundamentals of real estate, right? I think, like for me personally, I know what you're referring to. I think they had a lot of single family houses from what I've read, and what we're doing, we're just buying good quality assets, right? Simple debt, right? That's one way we can mitigate the interest rates, right? Buying a lot of assets in one location, right? Because if you have 20, 30 tenants leaving, you're still 70% occupied, right? Which obviously we don't want to get there, but having a lot of units in one place, and then most important than anything, I think, is having control over your business plan. Going back to Ontario, right? You get into a situation like that where now you have all this and you can't turn over units.
Right.
That to me makes all the difference in the world. So in the States, being able to turn over units, being able to execute your business plan. And for me, what I'm really trying to build, I think in the near future, is a strong operations, right? I think if you're going to go at scale, like what we're trying to do, you got to have strong operations. So one of the guys that I follow is one of my mentors, and hopefully we can work with him. He's a big operator in the States. And what he did is he bought a bunch of property management companies in the very beginning. I think he scaled it up to 1,000 units or something like that in property management. Then you're able to raise capital and execute on that business plan. So that's kind of the model that I see. I think build the right foundation to then be able to execute the business plan is huge. Not just relying on a third party in property management is kind of what's going to separate us from everybody else.
Good. Yeah, I like that. Well said. Operations is incredibly important. I was part of operations when I used to work at TD Bank when it came to incident management, problem management, change management. Those are like three main moving components in your business because there's always some type of a problem. And when that problem happens, how are you then resolving it? And have you made proper notes? And have you put proper procedures in so that to ensure that it doesn't happen again? And then are you making more changes because then those changes create another incident? And then that incident now then becomes a problem, and then you're doing problem resolution. And it's just it's a repeatable cycle. But if you're not managing all that properly, then all you're doing is fighting fires all day, because then you don't get to that problem resolution. You don't get to what was the root cause and how do we not make this happen ever again?
Yes.
Such an important, I think, part of my life, working and going through that in a large organization to see them how they executed it at a high level.
Yes, absolutely.
So,
and you often hear people, hey, I close on this deal, close on this deal, close on this deal, but not often do you hear the operations. Hey, we stabilize this asset, we turn over this unit, we did this, right? Because that's really where the bread and butter is with value add. But I just wanted to touch base on the question you asked me earlier, if I'm creating any businesses around that. And something that we recently started doing, because last year we were doing a lot of meetups, we hosted a lot of events, webinars. I've come to realize that a lot of people that were coming to events that were interested in real estate wanted to get into the game, or maybe they didn't have the capital to invest in the States, but they didn't have like proper income coming in from like a business. So that's where we realized there's a gap in the marketplace for what we do, which is, or something that we started doing recently, which is showing investors, whether they're new or even a little later in their business, how to find off market deals. I feel like there's a sweet spot of finding off market deals if you're starting out. I mean, if you can bring the deal, you can find the money. Like I'm sure you've heard that. But just finding the deal and being able to pick and choose what you want to do. You want to flip it, you want to burr it, you want to wholesale it. Just having that the ability to be able to do multiple things from that one deal. So we just started a program where we're teaching investors, showing them the exact strategies that we do. Because what I'm seeing this year, specifically in Canada, is, as you know, there's $350 billion worth of mortgage renewals that are happening this year.
Yeah,
there's a lot of pain. There's a lot of pain.
There is, for sure.
So what I'm trying to do is I'm trying to build an army of people that are trained. They know exactly how to look for deals, how to find these deals, how to negotiate these deals, and really go after as many deals as possible. Again, they can wholesale it, burr it, do whatever, but the deal, I feel like it's a huge thing, especially in this environment that we're going into.
All right, awesome, good for you. I'm going to continue to keep watching you because that's amazing. You've got some great ideas, it looks like, and and you got this huge growth potential that you obviously have in mind. And you touched on something that I think that's really important as well too, is that, if you bring the deal, then the money will come. But more importantly, I think it's more of a Stefan Arne thing. If you've got the deal and you have the people, then the money will definitely come, right?
Yes.
So yeah, Money People Deal, Stefan Arne. If you have it's one of my favorites. I've read that thing like twice because that's what really allowed me to grow and scale my portfolio as well too.
Is that right?
Yeah, he was a good friend of mine as well. I had him on a couple podcasts, and he used to come out and do webinars for us. This is when he kind of first started,
right.
And listen, man, he was he said what was on his mind.
Yes.
And I respect anybody that listen, you don't always agree with everything that everybody says, but I respect the fact that people say what they believe, as long as it's not hurting or harming anybody else.